Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. Let's get stuck straight into it because I want to do as many of your questions as possible. And the first particular question or comment I'm going to look at involves MA Offshore. And I believe that's all she wrote for when it comes to this company. So I believe this company was suspended just the other day. Yeah, court approved scheme on the 10th of July. Scheme becomes effective on the 11th of July, and suspension from quotation later that evening at 7:01 p.m. And I'd say no more trading when it comes to MF Offshore. This company is no longer with us, and it is a bit of a shame, to be honest with you. I first took a position in this company back in early 2022 at 50 cents. Now it's $2.69, and I just think management knows this company is going to be cyclical and they're getting out, maybe not at the top, because I still think this company had a lot to run moving forward over the next few years, but they know it's a long way from the bottom and now's a good enough time to get out. And we have seen quite a few companies being taken over on the ASX in the past year or so when the share price or the valuation of the company is at an all-time low. So at least the management of this company is doing the right thing, not selling the company when it's an all-time low or anything like that. But as Terry Casson mentions here, I think the writing was on the wall when Thorney, as a major shareholder, said they were going to take the science offer. And yeah, the share price finished at $2.69, so 1 cent shy of $2.70. Great management, should be a vote of non-confidence. I sort of understand that sort of sentiment. But I'm over this particular company now. I just wish they sold out at a little bit higher price. I did think they undervalued the company initially, accepting the takeover bid at $2.60. Even $2.70 was way too small of a valuation for this company. So thank you, Tara Casson. No longer talk about MA Offshore, no longer on the ASX. Ryan Corral says, when you go to take a position in these kind of companies, Gratiffi, we're talking about, how big did you go into them? 100,000 share position or 1 million shares gamble? Never gamble. I would never gamble in these type of companies. What you choose to sell at 500 or minimum 3,000. I typically, these sort of companies, I typically do a very small amount. So right now I am I'm testing out a new trading strategy, and unfortunately it's performing better than all my other strategies. Up already 6% this particular financial year. That's 2 weeks. And in that sort of strategy, because I don't have high confidence, I take a small position. So Gratiffi, definitely a small position because I'd have no confidence, very low conviction, that sort of company. And what I would probably do is I take a basket of these sort of companies, small positions, and when they prove that what they're doing is succeeding, I build on that position. So averaging up, not averaging down, averaging up is the way to go. And Astronomic says that's too high. Yeah, definitely take a small position in these sort of companies. Now, a way to get really and filthy rich is to put all your money into one of these sort of companies on the hope, prayer of the hope, that the company explodes in valuation. That is actually how you do become filthy rich. But that's also a way you lose all your money. And I've seen plenty of people do that. Plenty of people do that. So thank you, Ryan Coral. Karat Singh, thanks, Neppy, for looking at Tyro. Appreciate your insights. And I'm keeping a close eye on DXN as well. Volume spike looks interesting. So 20th of June. So I'll have a quick look at both these companies. Tyro, I, in fact, haven't looked at the chart for Tyro for a while. Hasn't been popping up onto any of my, this is the weekly chart, by the way. In fact, the weekly chart looks interesting. Share price got to a high, what was it, 440 back in 2020, 2021. Now it's $1, or less than $1. But the share price is in a downtrend. So let's have a look at the daily chart just to see if there's any. I'd still say the share price of this company is still in a downtrend. I have traded this before, but I think that's risky. Just trading the upswings here. You can see on occasion, share price has gone on a nice little short-term rally, and I have played those rallies before, but those rallies have been short-term, relatively short-term, and I'm waiting for a longer-term trend developing, and I'm not seeing that just yet for this particular company. DXN, however, is a little bit different. Much smaller company, playing in the data center field, and we're talking about smaller data centers. And I took a position in this company I think it was 6.6. I think it was a bit. I've taken 2 positions in this company, and when I add those 2 positions up, it's about 6.6, not 6.7.6, 6.6. Yeah, so I've taken 2 positions in this company, and this is an instance of me averaging up. And I think it's really weird because I'm trying to average my position, and I think I bought my second position here. So I'll just put it there, but that's average, so it's like 6.6. It's really weird. I should put both my buys in here separately. That's what I should do. Anyway, so DXN, without doubt, it's in a beautiful uptrend, isn't it? Well, it's developing beautiful uptrend, but this is a small company, market cap of $15 million, but they're playing in the data center field, smaller data centers, that sort of thing. And yeah, that's the main reason why. Actually, it's not the main reason. The first reason why this company got onto my radar, in fact, the initial reason was because of an announcement the company released, a trading update on the 7th of June. It was a positive trading update, a pretty good trading update, to be honest with you. And that was 7th of June. That was right here, actually right there. And that was when the share price was below 5 cents. So that really is when this company got on my radar, and the chart looks pretty good. And so 20th of June was right there. There it is. So yeah, the chart looks pretty good for DXN. So I've taken 2 positions in that company. And this is the sort of chart and the sort of company where I add to my position if they keep releasing good announcements, particularly financial announcements. If they become cash flow positive, if they become profitable, share price could go on a significant run. Potentially, the market cap could be anything from here. It's only a $15 million company. Anyway, I don't want to sell this company. It's a high risk company because it is a small company, and I don't think they're profitable just yet. So thank you, Karat Singh. Okay, Gratiffi, this is either going to 0 or made 10 bag. Regal just trimmed their position, by the way. And method 341 is absolutely right. That's why I would take a small position in this company, because it could go to 0 or a 10 bag. And if a 10 bag, say you take a $1,000 position in this, if you get 10 bags, that's $10,000. And then again, as I mentioned before, average up. If the company keeps producing really good at pennies 4Cs, keep averaging up as the share price goes up. And let's have a look at the chart for this company, because I didn't do that before. Gratiffi. And when I look at this chart, I say, yeah, there's no reason to get ultra excited just yet. Now, in saying that, share price isn't really in any sort of trend right now. You could actually say maybe it's more of a downtrend, but look at the volume. We have seen, or this company has seen the volume expand over the past 3 or 4 months. That's typically a good sign. There are some people who believe that volume precedes price action. So this could be a sign that Gratiffi would be moving into an uptrend soon, particularly if they release an appendix 4C and the company is profitable, operating cash flow, free cash flow positive, and then the market starts to become more confident about this company, conviction rises, and then the share price moves into an uptrend. So at this point in time, if I was taking a position in this company, it would be fairly small. I think big thing there, or big word there, is if, and I'm not a sharer of this company. So yeah, to be honest with you, I could actually understand why people would be taking a small position in this company right now, because I have been liking their appendix 4 or their quarterly reports over the past maybe year or so. So thank you, Method. Yeah, I would never take a big position in a company like Gratiffi. 7 divided by 69. Not sure what that is. 69 divided by 7 is, it's like 10. I don't know what's happening there. Context. I need context for that particular comment. Dot age drain. Okay, talking about Guzman Gomez. This is a joke. Guzman Gomez not worth $30. They're expecting to grow in Australia massively, but Australia's limited to population. Also, they're competing with other fast food. Guzman Gomez catered to middle and younger audiences, just like Petty Burgers, but he's not worth much. This is insane. And to be honest with you, I can't push back on that. I think it's an insane valuation. They would have to expand significantly overseas, and there's a massive question around that. So yeah, .age train. Yeah, I just can't push back on that particular comment. Duratec. Any news from this stock? Duratec. I would actually say this company is cheap, but just because it's cheap doesn't mean anything. And they released a revised guidance for financial year 24 and business update on the 20th of May. So it's almost 2 months ago. So no news from this stock. So let's have a look at the chart for Duratec. I am paying close attention to this company because if I start to see this company moving into an uptrend, I might take a trading position. And I'm not quite there just yet. I do think the low possibly has been reached. Pretty good buying below $1, just based off this chart, in hindsight. But yeah, I'm not there just yet. But I do think this company is cheap. Market cap $300 million, dividend yield 3.7%, and a PE ratio of 13.1. But definitely not an uptrend like we saw. There's me buying at 55.5 cents way back at the end of 2022. And I should put what I sold. Forget where I sold, somewhere up here. But at this point in time, share price not doing much. You could say maybe a short-term uptrend. I'll just have a look at the 1 hourly chart. Yeah, so if you look at the 1 hourly chart, you get a different perspective, don't you? This looks pretty good on the 1 hourly time frame. That's about it. We've had the little pullback, and yeah, not for me just yet, but definitely a company I've got on my watch list. Duratec. So thank you, Bragui ET3CF. Map says, so the starvation can continue as planned. Context again, sometimes, because this is quite a few weeks ago, context, and sometimes I have no idea what you're discussing, but starvation can continue. This was in regards to, well, this particular video was in regard to retail pain continues with KMD brands and Mosaic brands. So if you've taken significant investing positions in those companies, maybe you are starving right now. Or maybe you shouldn't be investing if you can't buy food. CH Huntley. Hey, Kneppy, when one has a stop loss and the market has a correction and gaps through your stock price, how does that work? Would you go through your monthly expense in platforms, subscription, research, IPOs in your position? Happy birthday. Cheers, mate. Thank you. Okay. Well, I don't use stop losses. So I have a manual stop loss. So when I look at a chart or the share price, I will sell out if the share price falls below my manual stop loss. So I don't actually put stop losses into the system. Now, I did use stop losses once many years ago, and I just didn't like it. And some people might say, well, you put your stop losses too high or something like that. No, I just don't like it. I understand exactly where I want to sell companies or my trades at. And if the share price falls to that area, I will sell out. And if a market has correction and gaps through your strike price, doesn't it automatically just sell your shares? I would assume so. Otherwise, you still got a holding in the companies whose share price has fallen below your stop loss. So I'd assume if a company's share price gaps below your strike price, it should sell out immediately. How does that work? Okay. And could you go through your monthly expense in platforms, subscriptions, and research IPO news? My monthly expense, I suppose I subscribe to ShareSite. It's like, I forget how much that is a month. And then I also subscribe to FinChat. I have no idea how much that is. Let's have a look. Where is it? Where is settings? Is it account? I have no idea. I would say $200 a month, or not month, a year. It's not much. And I think maybe Ticker, not much else. So to be honest with you, my monthly probably would be $50 a month, if that. I have no, I don't spend any money on research or IPO news. The only website I have been thinking of joining is Strawman with Andrew Page. That's the only one. I do like Strawman investing. I do like I do like how this works because it's just opinions and thoughts of investors, not of experts. So I do like this particular website, and you can put your thoughts in there, earn rewards, that sort of thing. The only problem with this is if you want to join, you can't join straight away. There's a waiting period, and I put myself on the waiting period back in December, and I've been waiting 8 months, and I think the price is about $800 to join a year. And that's the only thing I've been thinking about joining. I could have joined last December. I said, oh no, not for me. So I don't spend a lot of money. I don't spend a lot of money. I definitely don't spend money on people telling me what to buy and sell. Definitely don't do that. Oh, okay. Glenn Quinn says, thank you. Great video. You're welcome. John Barris, first time poster, love the content. Wanted to ask you what your thoughts are on PIQ, EYE, 3D8. If you had the time to take a quick look, much appreciated. I don't know anything about these three companies, although I did look at EYE, which is Nova I, the other day, and I have the other two no idea. So what I'm going to do is just have a look at the chart for all three companies, because to actually give you my opinion of what these companies are doing is going to take a lot more time than a quick time. So PIQ is Proteomics International. The one thing, oh, look at that, nice little run up in share price. The one thing I will do is have a look at these companies' most recent financial report. So Proteomics is $1. And we'll go back 1 year ago, because does this company release pennies 4Cs? It does. They mustn't be producing a lot of cash receipts. So I do remember this logo. So I've had a look at this company past, but I can't remember what they do. So in the most recent pennies 4C, which is the March quarter, not the June quarter, so this is almost 3 months old, $173,000 in receipts, $583,000 for the first 9 months, and they're still burning through a fair bit of cash. And that's probably the main reason why I haven't had a closer look at this company, because they're still not cash flow positive and receipts are quite low. That doesn't mean this company can't be successful. Doesn't mean they're hitting goals or anything like that. But this company is much more greater risk because it's not quite a business, a real business just yet. And when I say real business, I mean a profitable company that's generating cash flow. And what I mean by real business is capital allocation by management is the most important decision a company has to make. What to do with the cash flow coming into the business. This sort of company, the management have one thing: to raise more money so they can sell the company and to grow the company. That's all they have to decide, is to raise more money and to grow the company. They don't have to decide what to do with the cash because they're burning through cash. Do they have any debt? No debt. 4.6 quarters of estimated funding left. What do they do? Let's have a look what they do. Very quick look at what they do. Medical technology company, predictive diagnostics and bioanalytical services. Okay. But the main thing here is the chart. For some reason, the market likes this company, or has liked this company in the past. My share price has gone from, actually hasn't increased that much. Oh, this is a 1 hourly chart. Let's have a look at the daily chart. Yeah. So if you have a look at the daily chart, share price just doing nothing over the past 2 years. Let's go back 2 years. Share price just going sideways. At times, share price is above $1. Sometimes the share price is below $1. You could say at $1, if the share price gets above $1, you sell. If the share price gets below, say, 80 cents, you buy. That's what's been happening. In fact, I've definitely had a look at this company because I put a support line right at about 70 to 75 cents. So definitely a support level for this company at that low. Anyway, that's PIQ. Next one was I. So I did have a look at this company not that long ago. Nova I Medical. The company did, and this is a very similar chart to Proteomics. Share price has done nothing over the past 2 years. Right now it's 26.5 cents. And they did release something the other day, which I had a close look. What was it? I forget now. A trading update or something like that. Record sales results. Yep. And let's have a look at the most recent. So they don't release Appendix 4Cs. So we have to go back to the half-year report. So I just want to have a look to see how much cash this company generates, if they're profitable, that sort of thing. So we just go to the highlight section. Revenues $10 million, and they're loss-making. And I just want to have a quick look at the cash flow. Just because of loss making is not necessarily a bad thing. So operating cash flow negative by $4.1 million. There you go. So, and again, this is not a profitable company. Share price really doing nothing right now. I need to see some proof about their model that they can sustainably grow. That's what I need to see right now for both of these companies. And the final one was 3DA. So Mero. And yeah, this is by far the best looking chart. We've had a pullback. Is this pullback just like the pullback we saw back in October, November last year before another run begins? I don't know. So let's have a look at 3DA or Mero. Can't even tell you what this company does. The other two, I could. And the most recent report was in Pennies 4C. I have again feeling this company is not generating much cash because I can't remember looking at this particular Pennies 4C and coming away going, wow, I've got to follow this company a little bit more closely. So it doesn't matter what they do because every single storage stock has something to sell. And the most important thing when it comes to management of those sort of companies, apart from growing the company, is selling the story. So Amero, what do they do? Let's have a look. I like this about section, and I'm saying that being a little bit silly. Amero International is an ASX listed company. Well, there you go. I did not know that. Sorry. Focus on high value refractory, specialty alloy, and TI-64 powder production. Whoosh, over my head. For additive manufacturing of mission critical components for, actually, I remember reading about this company. Sounds pretty good. I reckon it does sound good. But how much cash flow? Yeah, $106,000 of receipts in the quarter and $867,000 for the 9 months and burning a fair bit of cash. So fairly similar to the other two companies. And all three of these companies, I personally need to see proof of concept. I need something. Now, the market is a little bit more optimistic about Amero, and the market cap of this company is $209 million. $209 million. In fact, I didn't have a look at the market cap of the other two companies, did I? Proteomics this is via TradingView, $133 million. And Nova I think is much lower than that. I'd say 30, 40 million. 858 million. Okay. Yeah, so at this point in time, the Amero chart looks the best. The other two charts just going sideways. I need to see proof of concept. But thank you. Just because they may not be the companies for me, doesn't mean they may not be the companies for you. It's up to you to decide what those companies are. I've already answered why I'm attracted to DRR, so I won't get into that. And I actually was a little bit disappointed with Ben Clark on Ausbie's the Core. He also talked about the fallacy, the myth that the dividend payout ratio is going to 50%. It's a minimum 50%. It could be 100% most years. And I do think the market might be overreacting. 9 slide glide. I agree with your comments on objective and note the company is actively buying back its own shares. I assume they also see value. Regarding IPG, I've seen this type of perennial growth in WC for another distribution business I held for a long term. Supply network have continued to report associated strong organic revenue growth. I have to wait and see in the financial year 24-25 results from IPG to see if they can start their organic revenue growth accordingly. No complaints about that, or no pushback on either of those. Have a quick look at charts for both companies. Well, so why not? Objective, I think, chart doesn't look interesting at all. And if you have a look at the weekly chart, the share price, beautiful trend all the way up to 2021. Share price got to $22. No way I was going to buy this company at that valuation, and the share price pulled back. And I think eventually, it says the PE ratio is like 42.9. I'm pretty sure the PE ratio was well above 100. And I think we're going to see some pretty good growth from this company over the next 5 years. So for me, I just bought recently. I can't remember what price. It wouldn't be much above $12. I just saw some value in this company based on the growth I expect. IPG or IPD Group. Share price of this company, they're me buying $1.44, and I definitely saw value. I've mentioned before, I don't usually buy into IPOs or companies that have just IPO'd. This was a rare obsession. This was a rare, what's that word? Exception. Another exception was Dust Group back in late 2020. And the only reason I would buy into a company that's just recently IPO'd is if they release a trading update, a really positive trading update. And this company probably released a really positive trading update in February 2022. So that could have been results. And that was just after they listed, like a couple of months. And look at the share price since then. Now, if you look at the daily chart, you might go, well, nothing much happening with the share price right now. It's sort of going sideways. I think this is just a consolidation period. And you can't say the company is cheap at the current valuations, P ratio of 24. But I do think there is pretty good growth in store for this company over the next 5 to 10 years. They're in the right area. And yeah, so I do have a position with this company. And in fact, I have not taken profits since I bought in. This is one of those rare examples where I've just not taken profits. Not even thought about taking profits yet with this company. So thank you, 9 Slide Glide. Katie in Australia. Hey, Kneppy, great videos. Thank you for your work. I am now a big fan of your channel. Thank you, Katie in Australia. Do you have other names? Do you have Katie in Netherlands or Katie in Hong Kong or Katie in Peru? That'd be awesome. What do you think about Dexus, Centre Group, Mirvac, Stockland, Karoon? Did I get most of those right? DXS, SCG, which is Sydney Cricket Ground, MGR, SGP, and Karoon. Let's see if I got all these right. Sorry, Dexus, Centre Group, Mirvac, Stockland Group, not the companies I prefer. Karoon is a company I have looked at in the past, but it is a commodity trade, and I'm not the biggest fan of long-term holdings in commodities or mining companies. So, and Dexus, and the other ones I don't have much of an opinion. They're not companies for me. So these are real estate companies. That's probably the best way to say it. So what I'd probably do is I try to understand what sort of real estate they invest in, and I have no idea. So are they diversified, mostly office, retail, or industrial? And I don't mind industrial REITs. Office REITs, office REITs, I'm a little bit wary. Just received an email from a management person at work, and currently in the Bureau of Meteorology in Brisbane, there's a 22% utilization rate of our desks, which has gone down from last year. So most people are working from home, and I think this is going to be a thing. So we do know there's a fair few management teams out there who want staff to come back to the office, but there is a bit of a pushback. So what you can do in these sort of companies is have a look at some of the announcements. So they do a portfolio valuation update. So Dexus has 176 assets. So you probably would say they are diversified. Do they have a about section? Okay, so in the about section, they just mentioned portfolio value at 57.1 billion, and they indirectly own 15.8 billion of office, industrial, healthcare, retail, infrastructure assets, investments, and they manage a further 41.3 billion. So not quite a REIT. This seems fairly similar, not quite the same as Guzman Group. So they have real estate, but they're also a manager. So this company probably would have a higher opinion of this company than a plain REIT. That's my opinion of this company. But next thing I want to do is look at the chart. Chart looks pretty ugly. Now, possibly at these levels, there's nice valuation. So share price of this company was as high as $14 back in 2019. Now it's $6.50. So the other thing you want to know is valuation, and has a nice dividend yield, 7.5%. Now, if we do start to see interest rates starting to fall, these sort of companies, I think, will move into uptrends, and that would be probably good investments over a short to medium term. So that's a thing to pay attention. Even though I don't have much opinion on these companies, I'm not averse to trading these companies, particularly if I see some positive momentum. Now, we did see the share price of these companies run up on the Friday because of what happened in America. So Dexus increased 2.6%. And I suppose I should talk about the other companies. Center Group, is this what's it called? The Center Group. What's the thing called? I just want to say Woolworths. No, not Woolworths. The Westfields. I have a feeling Center Group owns mostly Westfields. Am I wrong? That's my perception of Center Group. They own Westfields or run Westfields or something like that. So again, go to the About section. And they are starting off with acknowledging traditional owners. I don't care. Are they owned 42 Westfields? Yes. Across Australia, New Zealand. What do I think about Westfields? So there's Westfield at Chermside, and I like what they've done over the past 4 or 5 years. They've really diversified the offerings. They have restaurants and that sort of thing, and they've opened that section up maybe 3 years ago. So they have a theatre, what you usually find in Westfields, and they also have this restaurant section, which I think is a really good idea. So there is a possibility that they're thinking outside the box. Let's have a look at the chart for Center Group. So I don't mind Moores. I like that. And the chart looks way better than Dexus, doesn't it? And if you look at the weekly chart, and I think the sector of the market thinks much highly of this, better of this. But this chart goes back to 2015. Share price has done nothing over the past 9 years. So I would assume this is an income play. Dividend yield 5.17%. Yeah, income play. I have no interest, again, in these sort of companies. Mirvac, is this a construction, more like a construction company? Let's have a look. Let's have a look at their trading update, which they released not that long ago. And they don't have an about section. Shame on you. So it's more like a real estate company again. So is it more residential real estate? I don't know. Mirvac, let's have a look at the chart. This is the weekly chart again, nothing. So again, these are companies maybe more of a short-term trade if the valuation looks maybe good, or maybe just an income play, but I don't care about income plays. If I was wanting income, I'd want to buy a company that has growing dividends and a growing share price. So you get capital growth and growing dividends. That's what I want. Dividend yield of 5.44%, just nowhere near high enough for me. And then SGP, Stockland, I have no idea what this company does. It says REITS. And let's see if they have an about section here. Here it is, Stockland Group. A leading creator and curator of connected communities. There you go. They own, fund, develop, and manage one of Australia's largest portfolios of residential and land lease communities, retail town centres, and workplace and logistics assets. There we go. So let's have a look at the chart for Stockland Group. And yeah, look at that. This is an income play. Share price doing nothing, going sideways. And the dividend yield is 5.64%. So do I have a preference out of any of these companies? I don't know. I probably prefer Texas. Dexus, the company, but the chart looks the worst. But I will not even think about buying any of these companies, to be honest, unless the share price falls below $3. Yeah, buy when the share price is at an all-time low or something like that. And the last one was Karoon. Karoon, oh, it's up to $1.92. We've had a nice bounce with Karoon. Let's have a look at the chart. Karoon is all over the place. However, beautiful uptrend developing. Let's have a look at the daily chart. Developed way back. Its share price has bounced, and has it bounced? $1.64 up to $1.92. Now, in saying all that, it could be just a bounce. And the other thing to know about this company is more than likely if you just add oil, futures, we got crude oil maybe. if you put an oil chart on here, you'd see there's a bit of correlation between oil prices and crude energy. Oil prices went on a beautiful run in August, September last year. Crude energy share price went on a run. Share price started to fall, mirroring the price of oil. In fact, the same thing happened in March and April. Oil went on a run, crude energy went on a run. So there's a definitely correlation between crude energy and oil. So what is your opinion on oil? That's a fairly important opinion. My opinion on oil is very ho-hum. I don't really care. The reason I don't really care about oil is if you have a look at oil over a monthly time frame, like a 1 month chart, the price of oil has done nothing over the past 20 years. Well, we'll say 19 years. It's gone nowhere over 19 years. A lot of volatility in there, but it's done absolutely nothing over a 19-year period. Maybe even longer than that. No. So yeah. So, yeah. If you look at the daily chart for oil, it's doing nothing. There's no trend. There's actually no trend in oil right now. And I do believe companies like Karoon, Santos, Woodside are locally companies, and you have to trade them in the short term. And one of the things that gets me a little peed off about AusBusinessCorp is they get so many requests in regards to Woodside and Santos. These are not companies you own for the long term. They're just short-term trade companies. They're the lowest quality companies in the ASX 20, Santos and Woodside. And the reason I say that is if you have a look at the Woodside, let's have a look at the Woodside chart, and we'll have a look at the monthly chart. Share price of Woodside was higher back in 2006, almost 20 years ago. It was higher. And you probably see the same thing with Santos. Monthly chart for Santos, yeah. Share price of this company was higher back in the mid-2000s. Yeah, this is not a long-term holding. This is a trading company. And I have traded Woodside and Santos before, short-term trades. Anyway, that was a long response to you, Katie, in Australia. I wanted to keep this particular video shorter. Not shorter, but answers shorter. Ian Bentley says, hi, Kneppy, if you don't shop at Rivers, then where do you shop? I think I've answered that, haven't I? I don't shop anywhere. I haven't bought clothes at a clothing shop, probably for 10 years. I'm not joking. Well, except for my running clothes. And I go to Rebel for that. And last time I bought clothes that I wear every day was when I was in America. And I bought, every single day, I bought a shirt. And I still keep wearing those shirts right now. So if you see me around, there's a good chance I'm wearing a shirt that says Yellowstone, or maybe Yosemite, or maybe numerous of other stuff that I went to in America back in 2017. Swimming 11, maybe next time you could review BHP. Thanks for these videos, very informative. BHP. Let's have a look at BHP right now. I think BHP is just well, that's the monthly chart, but if you look at the daily chart, it's in a trading channel for the past almost 2 years, just going sideways over the past 2 years. And again, this particular company has to do with iron ore. There's a correlation between iron ore and BHP. Now, BHP is a little bit more diversified than just iron ore. And if I had to choose just one mining company to invest in, just one, and I had to invest in that company, I'd probably choose BHP. Because if you go back to this monthly chart, over time, you do well with this company. But there are on occasions, like in 2016, when the share price fell off a cliff because of iron ore prices. So if you put iron ore on this, you'd see a massive decrease in iron ore prices back in 2016. You could have bought BHP at $13 in 2016. That's the time to buy these companies. But if iron ore stays where it is, yeah, why not maintain a holding in this company? But there's a chance, always a chance, iron ore could decrease just like in 2016. We just don't know. So that's BHP. Thank you, Swimming 11. Helen Kalima, am I safe in assuming you don't have kids? Because if you did, you would be sleep deprived. No kids for me. Absolutely. Absolutely no kids for me. And I have never had a desire for kids. So I'll put it that way. Never had a desire. And people say, oh, you're going to regret that when you get older. Why? Just had never had a desire to have kids, just as me. Everyone's different. And I think there's more and more people thinking like I'm thinking, just no desire. Okay, black. This is quite a few replies to this one. Black top images. I see no good future for corporate travel management. Industry sentiment towards travel has changed a lot with the use of Zoom meetings and Microsoft Teams. I just can't see staff travel being a priority in any business moving forward. And then K23 agreed. And then Night Slide disagreed. And this provides a market. This is the whole reason for the market existing, because we all disagree with each other. Corporate travel management, I think, is cheap at these levels. And I think there will be a return to, maybe not a return, but there will be corporate travel. Without doubt, there'll be corporate travel in the future. The only thing that would disrupt it is teleportation, which won't be developed soon, if ever. And I just think at these levels, it looks pretty good. It's cheap. I believe this company is cheap at these levels. Maximum pessimism has been priced into corporate travel management right now. And if I see any change in sentiment, I will take a trading position in this company. I already own a small holding. That's a long-term holding, but I will trade corporate travel management. So I'm keeping a close eye on this. So waiting for a shift in sentiment. A shift in sentiment could be as simple as a positive trading update. So good run of comments there. I won't go through every single one, but thank you for that. Blacktop images, K23 man, and 9 slide glide. Could you please look at KPO? Tell me what you think, please. KPO. Can't even tell you. So a lot of companies on the ASX, I can tell you what the company is just by the ticker code. KPO, no idea. Kalima Power, 0.3 cents. First thing, don't like 0.3 cents. Don't like any share price below 1 cent. This, if you look at the summary, is just pip trading. If the share price goes up to 0.4 cents, that's a 33% rise in share price. If the share price goes to 0.2, that's a 33% drop in share price. Is that right? Share price goes up to 1 cent, that's a 33%. Share price drops, yeah, it's 33%. Either way. And if you look at the trade history, you'll notice share price dropped 25% from 4.4 cents to 0.3 cents. Day before that, share price rose 33%. So you see all these drops and rise of share price by 20 or 30%. I just don't like companies at this particular price level because it's a plaything for pip traders. There's pip traders out there who take advantage of this. I don't know why they would do it because they're just relying on the share price going up by 1 pip or down by 1 pip, but you do get a nice little return if it does that. And yeah, other than that, no opinion on this company. A CO2 capture company based off this particular announcement. Matthew Jenkins, I thought I said Jinx, which is the CEO of SKS Technologies. Let's have a look at their most recent Appendix 4C. I have a feeling this company's not making, there's no receipts at all. And last thing I do is the chart. I'm not even sure why I'm looking at the chart. It's going to be ugly. It's ugly chart. The share price has been a downtrend since May 2021, so 3 years, and it moved into a downtrend. The share price was 3.6 cents. So it's gone from 3.6 cents to 0.3 cents. So this is a definitely no-go for me, personally. I just need to see some sort of signs that this company is doing something, generating cash flow or anything. And the share price has to get a bit higher than 0.3 cents as well. But thank you for that. Bulldog 24. Dyke Seas says, thoughts on Humm's financials? I can do that. Definitely Humm's financials. I do know the chart looks pretty bad. So what I'm going to do is just going to go to the most recent. Actually, no, what I'll do, I'll do FinChat. I'll do this via FinChat. Why not? Take advantage of, I'm a subscriber. So Humm Group. So this is sort of like buy now, pay later. And don't they have cards where you buy now and pay later? I don't forget. Yeah, anyway. What do they call that? So let's have a look at the revenue. So this company, so the market cap of this company back in 2019 was $1 billion. Now it's $220 million. So that's not a good first sign. So let's have a look at revenue. So revenue, if you look at the revenue over the past 7 years, it's gone nowhere. It's flat. In fact, you could say there's a bit of a downtrend there. That's the first negative sign. Next thing I always look at is, say, margins. Gross margins are dropping. That's 2 red flags. So revenue, if anything, is dropping. Gross margins are dropping as well. There could be a reason behind that, but gross margins have fallen from 80% down to 40%. In fact, 47% based off this. That's the LTM, which is the last 12 months. And I would say this company, is it profitable? Let's have a look. It was profitable most years, but the last 3 years have been, there's a big down year, but that a big loss in 2022, that would have been a write-off, I would assume. But most years it is profitable. If you take away that big loss, most years it is profitable. There was one other year it wasn't profitable, 2018. The last 12 months here it says negative. And what about the cash flow? Just going to get rid of all these. Ooh, this is probably something to do with buy now, pay later. So I want to understand why the operating cash flow has gone massively negative. Change in net operating assets. Whatever that is. Okay, I want to understand this company a little bit more, but I wouldn't say this is a high quality company at all because of what they do. Let's just delve a little bit deeper into exactly what they do. They have a buy now, pay later section. They also have that sort of model where if you go into like Harvey Norman, and I'm pretty sure it's not Harvey Norman, I could be wrong, and you don't have the money to buy for it, which is sort of like buy now, pay later, but you can pay it in installments, which is exactly like buy now, pay later, but it's for bigger items. And I'm pretty sure their buy now, pay later was sort of like that model, and they tried to sell it, but they didn't succeed in selling it. They're doing a buyback, so management obviously believes the company is undervalued. Whether I agree with that, I don't know. And let's have a look at their presentation. Now, in saying all this, I'm going to have a look at the chart and go, no interest in this company at all. Flexi Commercial, Consumer Finance, Cards, AU. Don't even mention buy now, pay later. Wish they had like a different section here. I wanted a sort of like about section. Actually, let's go to the website. Why not? Humm Group. They changed the name to Humm because of the fintech. They call themselves a fintech. Specializes in financing bigger ticket purchases with a range of credit card and fixed term installment products. Yeah, sort of what I was thinking. But I'm not sure. Flexi Rent. It used to be called Flexi Group. Okay, so let's have a look at the chart for this company. I'm not the biggest fan of these sort of companies. And Humm Group chart, I have a feeling looks pretty bad. So there was a big long-term downtrend. And when I say long-term, I'm thinking years. Yes, this downtrend for Humm Group started in 2015. So almost a 10-year downtrend after a nice little uptrend, but 10-year downtrend. Share price at that point was over $3. Now it's 45 cents. If we hone in on the daily chart, there was a little period here where I did get a little bit excited. That was a nice little rally in the share price, but then they released their results. So that presentation I just showed you, the market didn't like those results. Share price fell 19% on the day and it's kept on falling. Share price got to a nice little low. You put a little sort of a box here, a rectangle, sort of this. I'm going to make it a little bit shorter, narrower. This is a buy zone. And we have seen share price get into this zone 3 times in the past 2 years, and we have seen share price rally out of that zone all 3 times. Doesn't mean it's going to succeed the 4th time. In fact, you can even take it further. So the share price of this company has been in this zone now 4 times in the past 2 years. So that is a support level. But doesn't mean that support level will hold firm. And we've just seen the share price bounce out of that level not that long ago at 40 cents. So that's Humm Group. I have no real big opinion. Thoughts on their financials, which was a question. Yeah, I'm just really concerned, which I went a little bit of a tangent. So actually, I'm going to open up their financial statements right now. So went a long way around to get to this point. Where are their financials? Here we go. Gross income, 298.7 million. So interest expense. So this company has a lot of debt, which sort of makes sense because they, to do what they do, they need debt to pay for what they do. And interest expense is going to be high, 132 million for this half year. That's high. And they were loss making. Employment expenses, operating other expenses are pretty high. Credit impairment charge of 48 million. That's pretty high. So loss making. Let's go to the balance sheet. Equity at 574, down 50 million. So that's a bit of a concern. Borrowings 4.5 billion, but that should be matched by this loans and advances, 4.6 billion. So that's the reason why the borrowings doesn't really concern, because it's matched by loans and advances, just like banks. So that doesn't concern. They have a fair bit of cash, $390 million of cash. And cash flow statement. And this is the other thing one of the things I don't really like about these companies. If you look at the cash flow statement, operating cash flow negative by 406 million. And the main reason behind that is net movement in loans and advances by 418. Yeah. So what do I think about this company and their financials? It's just too hard for me. Just too hard. And I just don't see any need to be there. That's just me. And I'll just try. All I would do with these sort of companies is just trade. And if I see the share price get to 40 cents, and to be honest with you, it got to 40 cents recently, although I haven't been following this company at all. But now I am, because of this particular question. So thank you, Tyski. So I'm now paying a little bit more attention to Humm share price. If it gets to 40 cents, maybe a trade. But it's just bounced off there, right, recently. A Song. I've been watching a video every day since I started investing a few months ago. Just wonder if you're still holding, yes, Aussie Broadband. I'm still holding Aussie Broadband. What's your thought of its recent performance? I have no complaints. Now, one of the reasons why the share price pulled back recently is because they lost that contract with Origin, and that was won by, where's Aussie Broadband here? Stocks. There we go. And that's why the share price dove at the 14th of March. Fell, what was it? Fell 18%. Share price hasn't moved from there. It's just gone sideways, which is a good sign. I'm in this for the long term. I think this is a disruptor in this space, and this company will grow significantly over the next 5 to 10 years. So I loved the telecommunication space back in 2010 to 2014 or 15. A lot of companies you could invest in this space back then. Then there was consolidation, a lot of mergers, and then I didn't like that section anymore. Now I'm liking this sector again because there's other players. Aussie Broadband, Superloop. Don't like Telstra. And there's also companies like Swoop, who's swooping in. And I see some similarities in this sector to what I saw back even before 2010. And Aussie Broadband might be the best of the lot. Might be. But Superloop is more in love. The market is more in love with Superloop than Aussie Broadband right now. And it's pretty obvious just by looking at the chart. Thank you, A Song. Michael Georgievic, thanks for answering my questions in your weekend vids. You're welcome. 9 Slide Glide. What's amazing regarding City Chic is that retail mogul Brett Blundy bought additional. Yeah, that's true. I think I've talked about this. What is Brett Blundy doing? Intriguing. Thanks for taking us through your reviewer trade. Can you expand on why you have settled on 150-day moving average versus other options? Keen to hear if some science or data behind that. I've used a 10-week and 35-week EMA for years, but I can't tell you why I settled on that. So 10-week is, funny enough, 10-week is 10-week is 50-day, 35-week is 165-day. So you sort of, I like 50, I just like round numbers when it comes to moving averages. I actually do like 25, 50, 100, 150, 200. And I see some of those work. It's just what I use, and I've always used it. Maybe not always, but I've, yeah, for some reason, I can't tell you why exactly I use 150. Maybe it's in between 100 and 200. I think 200 is a little bit too much, and 100 is not quite a long. I use 150. Let's go back to the chart. I use all three, to be honest with you. Now, I don't have 150 here, but 150 is in between the 100 and 200, which is this green ribbon. That's between the 200 and 100. And I consider that area to be the longer term trend. So I consider that the long term trend. The shorter one, 25 and 50, is the short term trend. So I like to see long term trend up, short term trend up. This is super low, and we can see them both up. And why 150? First reason, I don't have it here now, but the main reason I like to have that solid black line is it's just an anchor for me, because I don't have other lines here. It's just these ribbons. So I just like to see that black line, and I just use that as my long-term uptrend. So if I see the share price above 150-day moving average, it's in a long-term uptrend. That's just what I use. There's no correct answer to this. I have seen the shorter-term moving average ribbon to be support. I've seen the longer-term moving average ribbon being support. You can see with Superloop, it's a short-term moving average channel, which is support. Every single time it gets into this area, it rallies. And that's a good buy position or buy price for Superloop. What's another company? Let's have a look at another company. Let's go to technical. Let's go have a look at CoSol. So CoSol, seeing the same sort of thing. Trying to think of another example. And then if you do the weekly, so if you do the weekly, the 200 week and 100 week is way too much in my opinion. So I do prefer just looking at the short-term ribbon, which is the 50-day turns into 10 week. Yep. Anyway, that's just me. Everyone's different. Find what works for you, but there's no scientific reason I chose that. I have not actually read any scientific reason showcasing why a certain moving average is better than others. I have not read anything about that. It just what works for me. So thank you, Trent Howard, for that. Assuming thoughts on Sigma, why is it holding at current levels? No idea. Is it purely a gamble at this point? Yes. Considering ACCC will have final decision, which could be approved or not approved. Absolutely, it's a gamble. I don't understand why people are buying Sigma at these levels, because for me, there's a good chance ACCC would not improve the takeover or the merger. I think there's a big risk about that. Big risk. In fact, their most recent decision increased that risk. So I don't understand why the share price is at these levels when if ACCC says, nah, sorry, the share price of Sigma will plunge. The share price of Sigma could drop almost 50%. Anyway, so there is risk, and I'm just not interested in that risk right now. BenHutchison, we expect to trade profitably in second half financial year 24. City Chic CEO is a BS artist. Market has had enough of it. Yes, that's in regards to City Chic and Satire. Shockingly bad day, 24th of June. Yes. Let's have a look at the chart for City Chic. So that was the 24th of June, and they have done a capital raising. When did they do the capital raising? 24th of June. Okay, so it was the same day. And you can see there's been no bounce. When you see a down day like this, the share price falls 52%, and there's no bounce, that's actually a bad sign. That means there's no one interested. Have a look at Satire. Good to the right ticker code. This one had a bounce. Oh, geez, I didn't realize that. This one had a bounce. I mentioned Satire yesterday in my ASX Daily Rundown video, and the share price was about $1.70. Share price closed at $1.42. This is intriguing. I did not realize this for Satire. Let's have a look at the 5-minute chart. There would have been a massive sell-off. Whoa, huge sell-off in the last 2 hours. Share price went from $1.70 down to $1.40 in 2 hours. In the last 5 minutes, share price fell 6% on huge volume. Jeez. Yeah, this is a trading stock right now, Satire. And back to City Chic. it's, what can you say? Again, Blundy bought some shares before this plunge. Why, at this point in time, I'd be thinking, why would you even be thinking about buying shares in this company? It could go the way of Booktopia. I'm not saying it will. It could go the way of Booktopia. Booktopia, I think, has gone bye-bye. I'm thinking that is true now. They're going to administration, and I'm pretty sure the administrators are firing the majority of staff. So I'm not sure if Booktopia has a future, and we just don't know. So City Chic, I'm concerned about. Probably not as concerned as I am about Mosaic Brands. This company has a market cap now of $12 million and share price of 7 cents. So I think there are major concerns about Mosaic Brands. If not, this is the cheapest company on the ASX. Anyway, CEO is a BS artist. Yeah, I think a lot of CEOs are BS artists. This is Liam Jones, good production announcement with Boss, but price goes down. I would say Boss Energy is just like a mining company. Share price just moves with the underlying commodity, even if the production results are pretty good. Still, that's an overgeneralization, but I'm going to say it probably holds true. This one actually triggered on my sell screener. This little cross here, that's a sell. But in saying that, it hit a sell trigger at a support level. So support level is around about $3.80, which is the lows we saw back in December last year. And we have seen share price rally after that. So let's uranium, and we'll do futures. What we'll do is we'll make this line black and bigger. So I've just overlaid uranium prices on Boss Energy, and there's a easy to see correlation here, isn't there? It's not absolutely perfect, but it's easy to see. So there's a definite correlation between Boss Energy and uranium prices. So if Boss Energy releases a really favorable production update and uranium prices falls 23%, Boss Energy will fall significantly. And on the flip side, if Boss Energy releases a negative production update, but the uranium prices rise 23%, you'll see Boss Energy share price rise pretty significantly. So that's the problem with these sort of companies, is the performance of the company mostly has nothing to do with management. Well, sort of. Management has a say, but overall, generally, if you just assume that all management teams of mining companies are identical, what drives the share price of those companies? It's the underlying commodity price. And actually, Boss Energy does look interesting just at these levels. So let's have a look at uranium. I haven't looked at uranium price recently. I just had it up just a second ago. Where's my uranium? Where's my uranium? There it is, uranium. I need to look at a trend line chart. So uranium not doing anything right now. It's in a holding pattern. I don't know reasons behind that. Maybe more uranium mines have gone into production, so we're starting to see increase of supply in the market. I don't know the answers to that. But thank you, Liam Jones. I'm assuming you're a Boss Energy shareholder. I was once a Boss Energy shareholder, then I took profits way too quickly, and that's all the share price just go on a run. Star Entertainment Group is super cheap at this price range. It's only a matter of two ways: the arbitrage play or the comeback. The arbitrage will only be the last option if the management are unable to reduce their costs and getting back to profitable. Valuing all assets, especially the casino, it will be worth at least $2. I would have to mostly agree with that. And I actually look at Star Entertainment Group's chart almost every single day. It's in my, I look at it every day, but it's not in my watch list that I look at every day. But I look at this every day because I'm just waiting for the time where I get confirmation. And that confirmation could be any day. Share price is moving into a consolidation phase. Now, the consolidation phase could last 2 months, 1 month, 2 months, 6 months, 2 years. The longer it lasts, the better it is when it breaks out. But I think the chances of Star Entertainment Group share price breaking out eventually up quite high. I just don't know when that's going to be. Negative sentiment in this space, the negative sentiment will change. I think that's almost an absolute certainty. So share price is going sideways right now. I'd say most of the bad news is already priced in. Can't say it's absolutely all priced in, but I would have to agree with Ruben right now that I would say Star Entertainment Group is super cheap. There's still a little bit of risk, but this is definitely one of those turnaround plays I am looking at, and I will trade this when it comes to that. And you'll find a lot of the experts will going, "Oh no, you can't do that. Oh, that's terrible." All right, that's probably being a little bit unfair. Anderson says, interesting tweet for discussion. How returns of strategies varies across different environments. Your tweets for discussion are often really good reflections. I just wish I remember what I looked at or talked about in that particular ASX Daily Rundown video. What is a good amount of money to invest for a long-term stock? This is dependent on your own personal circumstances. If you have $10 million to invest in, a good amount of money to invest in for a long-term stock could be a lot of money. If you have $1,000 to invest in, well, I'd say, well, maybe $1,000 is not enough. So it all depends on your personal circumstances, how much of a risk taker you are. Are you more risk averse than risk taker? That sort of thing. So a good amount of money, it's up to you. What are you comfortable putting the amount of money into one particular position? If you like a particular company, you like it well, much better than other companies, you could put 50% of your holding, your money into that particular company. I would never do that because I never have that sort of conviction. So what I tend to do is, so my holdings, if I do buy a company, it's never more than 1% of my overall total assets. But because share prices of companies rise, my biggest holdings right now are more than 1% because, yeah, share price has risen. And that's the main thing about me, is I never have high conviction about any company. So my companies I think are the highest quality companies in the world, I still have questions about those companies. And that's the thing about me. I always have questions and I never have high conviction, which is a reason why I will never go all in on a company. Never, ever go all in on a company because I always will have questions. Liam Jones, brilliant response. About what? I have no idea. Again, this is context. Thank you. Always learning new ways to analyze from you. Thank you very much. I love like that. Thank you. You've just increased my head size by twofold. The CSL debt is the elephant in the room. When it comes to CSL, I don't think of debt. I don't really care about the debt. The macroeconomic environment will change when RBA decision in August comes around. Inflation numbers didn't look too promising. What happens if rates go up? With hindsight, it feels very similar. I recommend it. Christopher Joyce from AFR as essential research. Interesting. CSL, I've never really worried about CSL's debt. What's the debt to equity? Let's have a look. Let's have a look at the balance sheet via FinChat. So, according to this, they have liabilities. We have to go to the liabilities section. Long-term debt of $9 billion, current debt, and equity of $37 billion. So debt to equity is 25%. I wouldn't consider that too high, to be fair. So I think a lot of people look at if debt to equity gets above 100%, that's when they start to worry. Good. What's a good debt to equity? I don't know. Generally, good debt ratio, not debt to equity ratio, because a debt to equity ratio of 1 to 1.5 is not good. Is a debt to equity ratio below 1 good? An ideal debt to equity ratio is generally somewhere between 1 and 2. What? Generally, a lower ratio is better. That's a weird one. between 1 and 2 is good. What? What does Investopedia say? Oh, they talk about looking at the industry average, that sort of thing, which makes sense. Anyway, I'm not a big fan of debt, but when a company becomes really, really big, debt becomes less of an issue for me. And just looking at CSO, I don't really care about that debt. That's not something I would care about. That's just me personally. I don't really consider it debt. I don't really consider it an elephant in the room because it's CSL, and I don't think it's going to be an issue for that company. But thank you, CHH Huntley. We all have different opinions, and that's what makes a market. Swimming says, thanks for that, Nappy. You're welcome. I don't know what you're thanking me for, but you're welcome. David Race, Synlait has been screwed by Fonterra. It was ugly being bailed out by Chinese. I'm just going to have to trust you there. I don't really follow Fonterra or Synlait. I did read the other day that A2 Milk is a big shareholder of Synlait, which is interesting itself. So there is potential that maybe A2 Milk can buy up Synlait. And Synlait share price ran up the other day because their debt package looked like it's going to be passed by shareholders. In fact, I think it was passed. Synlait Milk down 11%, but it's okay. Rallied 47% the other day. And special shareholders meeting poll results. Let's have a look. So this is in regards to their funding. If they didn't get this funding, they were going to go bye-bye. 104, 99.59% said for, 0.41% said against. I'd like to speak to those people who were against this resolution to who didn't want this shareholder loan because the company would have went kaput, I believe, if they didn't get it. Anyway, so I just have to trust you that Synlait was screwed or is being screwed by Fonterra. 9 slide. Excellent question, Kneppy, regarding where is the scrutiny on higher fuel prices in Australia. The Toothless Tiger, ACCC, stands idle while we all get gouged. Warren Hogan is doing his best to advocate rate rises, which benefits his employer, Judo Capital or Judo Bank, net interest margins. His comment, RBA can't walk away from CPI result, is completely misguided. I actually have to agree with you about this. I just don't understand why Warren Hogan is he's just so gung-ho when it comes to the Reserve Bank needing to increase interest rates. He's just so adamant. He's like, they have to increase interest rates 3 times. And then there must be something behind it. And maybe you're right. Maybe it's going to benefit him and Judo Bank, although, yeah. But as I point out, when the high, yeah. So, yeah. So thank you, 9 slide, glide. James Dean, not the James Dean, because he died in a car crash back in 1955, 56, 55, 54, 55, 55, 24 years old, boy. Anyway, James Dean says, not the James Dean, says, with Harvey Norman get hit by higher interest rates for their properties. I would assume no. Do they own their properties outright? I would assume they own their properties outright. I'm assuming. I have no idea. I could easily find out, but I want to move on. So they could if they don't own their properties outright, but do they? That's a question. That's a question for you, James Dean. Do they own their property outright? And if they don't, they will get hit by high interest rates. But then again, if they do own the property outright, they're probably not getting the best returns. Returns on property are not that good. That's just my opinion. I have seen and researched the yields on property, and they're not that good. If I had $1 million, I would not buy property with that $1 million. I'd buy stocks because you get better returns. That's just me. But Australians tend to be obsessed with property and think you get really good returns, but you don't really. Think about it. You get probably a 3% yield in property from rent. That's pretty pathetic. So you're relying on the growth of the property prices to get the best returns. Jokey, any thoughts on Audinate? I'm a shareholder of Audinate, so therein I am bullish on Audinate. In fact, I transferred Audinate from my small cap portfolio, which I'm now have ended, to my quality portfolio. I don't necessarily think Audinate is a high quality company, but I think it will be perceived as a high quality company, possibly already perceived as a high quality company among fund managers. Bought 2 weeks ago, NM down 6%, thinking I jumped too quickly. Okay, Audinate share price has gone on a little bit of a dip. I don't know how far much further it might drop. There's a nice little support level at $15, and it's just above $15. For me, this is long-term hold. I haven't even thought about selling my position in Audinate at all. I don't care the share price has dropped a fair bit. In fact, if anything, if I see the share price dropping even further, I might even think about adding to my position. This is or has the potential to be one of the highest quality companies on the ASX because of their moat. Massive moat this company has. But I think that point won't be for another 10 years. So this is a company I'm just going to hold forever. Maybe not forever, but as long as possible. Thank you, Poker GG, Poke GG. Nice little doggy there. Alistair James, thanks, Kneppy. Great videos. Thanks for the information. You're welcome. Training View setup. So again, a few comments in regards to Training View setup. Thank you, Joseph Focal. You're welcome. Steve, KK8YB. Oh. Hi, Kneppy. All I can get are lines. How do we fill them in? Do I need a Training View subscription? Using movie average ribbon under technicals. Is there another? This seems like a standalone video. This seems like, based off some other of the replies to this, I'm going to have to do another follow-up video. We'll call it that. A follow-up video for Ryan, Mott, and Co. And what I'm going to do now is, that's what I'm up to. I'm going to answer a few other questions, the most recent questions. Now, I'm going to finish this video right there because an hour and 16 minutes, that's probably long enough. And I'll do a standalone video on that particular question in regards, what do you do for a job, mate? Meteorology. Do you have enough O's there? Yes. I always have to count the O's when I'm talking about meteorology because there's 3 O's in it. Meteorology. Yep. Anyway, that's all I have for this particular answer reply video. If you have any questions, leave it in this particular video or the comment section of this video. And eventually I will talk about your question or your reply. So have a good day. Have a good weekend. Talk to you later. Bye. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.